founder of TradeSpoon. Today I'd like to go over current market conditions and trade of the week. For those of you who are new, welcome. If this is your first live or recorded event, please review the disclosures. They're very important. You can visit the link on your screen, optionscreening.com, to understand the risk associated with trading stock or options. So I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, we do have a 1 hour webinar on Friday, 9:30 Central, 10:30 Eastern. I encourage you to join. Looking at the stock forecast toolbox for today, in terms of macroeconomic conditions, we had the employment index that showed higher than expected. And so the wages are high, employment cost index is higher, and the rates increased as a result of that. Model predicted 512 by 508 to be support was the positive trend. We're currently trading at 505 level. Actually, probably below. Google is down another 1.25%. Looking at the 6 months prediction, model sees potentially, if Fed tomorrow we have a Fed decision and unemployment data on Friday, and then 75% of S&P 500 companies will report their earnings by Friday. So if there's a positive surprise and the Fed sounds dovish and macroeconomic data and inflation subsides, we potentially could make all-time high on 543 in the months of May. Support is still sitting at the 480, neutral trend long-term. And you can see stocks that are stronger, like Google had a very strong earnings, probably one of the best among the Magnificent Seven, but nonetheless, whether it's Google or Microsoft, Netflix, or Tesla, you can see all of these stocks are very weak, and Google gave up maybe already more than half of its gains. It was, I think, as high as 180 after the earnings announcement in the after-hours section. So all eyes on tomorrow and Friday. If employee cost index is of any indication of what the employment numbers will be, then the yield is going to continue going higher, potentially breaking 470 level, higher for longer, and then Fed decision on Wednesday will influence the interest rates. 10-year is elevated, approaching 4.70. I think if it's going to break out 4.70 level, there's more risk to the downside. On the opposite, if it drops below 450, then we will revisit recent highs relatively quickly. Dollar continues to be strong, 106.20, stronger dollar, and we can see value stocks pulling back, QQQ pulling back, and spiders pulling back. Personally, I think we will reach 480 or even as low or below that. But for now, tomorrow, if this level doesn't hold, right, we're closing the gap basically. If the 504 level doesn't hold, and this is the breakdown level, then that opens the door to revisit 494. So tomorrow, expect more volatility in the market. Personally, we're in the middle of the earnings season. I have started doing, sometimes have long volatility, sometimes have short volatility based on the demand and supply for calls and puts. I'm looking at the put and call skew. This is an example where you can, even relatively expensive stock like LA Lilly, I invested $2.10 and closed the trade for $3. So close to 50% profit overnight. So these are some of the examples of the trades that we do in live trading room. Hopefully you can join us. You can do it for free on Wednesday, morning bell and closing bell, 8:15 and 1:55. I hope you guys can join me. And thank you very much and have a great day.